Hey guys, you know very well recently India and European Union, these two countries have concluded a trade agreement, and you have to know a lot of things about trade agreement as part of our examination. You see, I'm not taking the newspaper reports, etc., but I'm only here taking the PIB reports. You see, three documents are available in the PIB, Press Information Bureau. This is the first document, India EU Free Trade Agreement, a transformational trade deal for India's textile and apparel sector. Okay. Then the subheading is like zero duty access to a $263.5 billion textile and apparel import market, and some details are given about the document. And before that, two more documents are also there. India and the European, one second. India and the European Union conclude free trade agreement negotiations on financial services. Then some subheadings are given. Negotiations mark a significant milestone in strengthening bilateral economic and strategic cooperation with the innovative provisions on digital payments and fintech. Second subheading is FTA aims to provide necessary institutional and regulatory framework to accelerate bilateral collaboration, facilitate market access, and catalyze deeper integration of financial systems of both economies. And third subheading is, or takeaway point is, with around $83 billion total services trade in 2024, India and the EU share a robust commitment to strengthening bilateral cooperation in the financial sector. So this document, earlier document, was about textile and apparel trade. Second document is about trade in financial services. And the third one and the most important document PIB has released is the fact sheet about the deal. Okay? About the entire free trade agreement deal, fact sheet has been shared. India and the European Union trade agreement, and it is dubbed as the mother of all deals until now that have been done, both by India and by European Union. Okay, unlocking opportunities and empowering India at 2047. And detailed facts are given. Okay, so what I'm going to do is I have clubbed all the details that are there in the three documents, and without any going into analysis whether the good deal is good, bad, etc. First of all, we will try and focus on the facts. Okay, what are the facts that are there in the documents? Okay, so I have tried to summarize all the information, that is important information, that is there in the document, and we will try and see. Okay? Then after that, if time permits, maybe in some other video, I will try to present the critical analysis of the deal. So let's wait for 2 to 3 days more. All the newspaper articles I'll try to collect. I'll try to present a critical analysis or critical understanding of the deal. But for the time being, we will confine ourselves to the facts of the deal. Okay? So I have a presentation. So the title of the presentation goes like this: India European Union Free Trade Agreement, mother of all deals. All deals, dubbed as mother of all deals, a strategic, economic, and a geopolitical milestone. So briefly, these are the contents that these are the aspects that we are going to cover presentation. Okay, right. The first little bit we will try and understand the background and strategic significance of. You see strategic alignment. If you see India and the European Union, generally these two are known as middle powers. Okay, geopolitically they are known as middle powers, whereas the superpowers are there, USA, Russia, etc. Then weaker powered countries are there. India and European Union are middle powered countries. Okay, so these have concluded negotiations for a comprehensive free trade agreement. The agreement transforms India-US relations from a traditional trade partnership Okay, earlier the partnership was traditional trade partnership. Now it has been transformed into a modern, rules-based, and multi-dimensional economic alliance. This deal responds to the contemporary global challenges such as supply chain disruptions, protectionism, okay, that is increasingly becoming the trend nowadays, protectionism, digital trade, sustainability, and strategic autonomy. Okay. If you see the economic impact of this deal, uh, this free trade agreement links the world's fourth largest economy, that is India, with the second largest economy of the world, that is European Union. Together, if you take all the countries that are there in the European Union, they'll become a second largest economic bloc. This creates a combined market of over 2091.6 lakh crore rupees, which can be roughly translated into $24 trillion. Okay? So India's GDP is $4 trillion roughly, and the European Union's GDP is uh, $20 trillion. Okay? Right. So, and apart from that, it also impacts nearly 2 billion people. Okay. And this agreement aligns with India's vision of Viksit Bharat at 2047. You know very well. Our goal is by 2047, when we reach the 100th year of independence, we want to become a developed country from the present developing country. Okay? So the free trade agreement aligns with that, and European Union's objective of diversifying supply chains away from over concentration. You know where the over concentration is there? Over concentration here in China or with China. Most of the countries, or most of the European countries for that matter, are dependent on China, and they want to diversify the supply chain. That's why they have come forward to ink a trade deal with. Okay. This is the strategic significance. Okay. And briefly, we will see the India EU trade profile and the existing baseline. Okay. So if you see bilateral mercantile trade between India and the value, if you see 11.5 lakh crore rupees, if you translate it into US dollars, somewhere around $136.5 billion. India's exports to European Union, according to the data, is 2000 of 2025. It is 6.4 lakh crore rupees. If you convert them into dollars, 75.85 billion. Whereas trade in services, okay, if the trade in services with both the blacks, if you see, it's somewhere around 7.2 lakh crore rupees. If you convert them into US currency, it's $83.1 billion. And this agreement, free trade agreement, it addresses trade potential gap. You see, this deal ensures that there is predictability in market access, tariff certainty, and regulatory transparency. There is no arbitrary regulatory activity are there. Okay, all the things are ensured by this. Next angle we will examine is market access gains for India. What India is going to gain with this? Excuse me, give me a second. Okay. So the advantages for India are India is going to eyeing at unprecedented tariff liberalization. India is going to get preferential access. You see, India secures preferential access across 97% of EU's tariffs, covering 99.5% of India's export value, which is very, very, very good. Okay. Some takeaway points are there is going to be immediate zero duty access for 70.4% of tariff lines. That includes 90.7% of exports. Okay, which includes goods like textiles, leather, footwear, tea, coffee, spices, gems and jewelry, toys, sports goods, marine goods, etc. You try to remember the goods. You may have to mention these goods by name in the examination. Okay? Apart from that, the third takeaway point is zero duty over 3 to 5 years for 20.3% of tariff lines, which comprises of 2.9% of our exports, which include processed foods, marine products, and arms and ammunition. Okay? The fourth significant aspect is tariff reduction or TRQs for 6.1% of tariff lines that comprises 6% of our exports, which includes goods like poultry, bakery items, preserved vegetables, cars, steels, shrimps, etc. Okay. Then, if you see the advantages from the point of view of employment and MSME competitiveness, you see this was one of the major concerns, whether the MSMEs are going to survive when we ink an agreement, free trade agreement with the European Union, etc. However, the MSME competitiveness is going to increase. Okay, you see the labor intensive sectors worth of 2.87 lakh crore rupees or 33 billion dollars. Uh, Earlier, which were facing the tariffs in Europe, which were facing in European Union, which were facing tariffs up to from 4% to 26%, will now enter at zero duty. Means the goods and services produced by our MSME industries, the exports which are going to European Union from our MSMEs, which were earlier facing 4 to 6% of duty or tariffs, now they will enter at zero duty, which is going to be a biggest advantage for MSMEs in our country. And that too, what is other advantage? These are labor intensive. Okay, these are labor intensive industry. Okay, so in this way, maybe more number of jobs are going to be created in the MSME sector. Okay. Then India's commitments to European Union as part of the trade deal, we also have committed some things to European Union. So what are these? India offers 92.1% of tariff lines, covering 97.5% of European Union exports. Okay. Uh, there is going to be immediate duty elimination for 49.6% of export lines or tariff lines. Then there will be phased elimination over 5 to 10 years for 39.5% of the tariff lines. Then tariff reduction or TRQs for 3% of the tariff lines. The goods, some of the goods here will include apples, pears, peaches, kiwi fruits, etc. Okay. So what this facilitate? What is the advantage for European Union because of this? This facilitates import of high technology EU goods into India. It reduces input costs and it integrates Indian farms into global value chain. Okay? So these are the advantages that European is going to have, but in turn that is going to benefit India this way. So that's why we have agreed to enter into free with. Right. So one of the biggest concerns we had with respect to allowing or entering into free trade agreement European Union is the agriculture sector and the impact that is going to have on farmers. You know very well, most of our farmers are small and marginal farmers, okay? And most of the farming that will be done in our country is subsistence farming, whereas in European Union, it's like an industry. Okay? Farming is also like an industry. It is done on commercial base. So one this concern was that Indian farmers are not going to withstand the competition from the European Union because of the exports, cheaper agricultural exports that are going to come from European Union to India. Okay, but however, uh, the imports have been allowed with the sufficient safeguards. Okay, we are going to see that. Right. So export opportunities for Indian farmers. Okay, so there is going to be preferential access for Indian farmers with respect to tea, coffee, spices, grapes, gherkins, cucumbers, dried onion, vegetables, fruits, and other processed food products. Okay, there is going to be preferential treatment or preferential access for all the market in all these products. What is the advantage? The advantage with this is it enhances farmers' realized incomes. So what is the income that is realized by farmers? That is going to be increased, or there is going to be improvement on the realized incomes of farmers. Then it's going to positively impact the rural livelihoods, and our farmers are going to become more global competitive. Okay, and Indian agricultural products or exports are going to become more competitive at the global level. Earlier, our agricultural products were not giving proper competition, means they were not competitive enough. Now they might become competitive at the international market. Okay. You see, simply competitiveness means offering better quality of goods at cheaper prices compared to other countries. If we can offer agricultural products at cheaper prices with good quality, then we can say that we are competitive, and the international players might choose our products over the products of other countries. Some safeguards are given. Lot of fears were there, especially taking about the dairy sector. Okay, because many European countries like Germany, okay, Switzerland, these are very, dairy wise, they are very strongly, and there was a fear that the cheap dairy products may come into India, and they may disrupt the livelihoods of the small farmers who also, keep the animals, milk animals, and do some. So some safeguards were given to sensitive agricultural sectors such as dairy, cereals, poultry, soya meal, and select fruits and vegetables. Okay, so for all these things, safeguards have been given. Okay, so in this way, the free trade agreement balances export expansion with the food security and domestic priorities. Domestic priorities means India's priority. India's priorities were also kept in. You see, dairy and the other agricultural sectors was the biggest concern when we thought of entering into a free trade agreement with the European. Then other area that was discussed in the free trade agreement is the rules of origin and of doing business. You see, rules of origin are very important. For example, if European Union, one country is Germany, if it is exporting something, it's not that Germany has imported the goods from USA, and then in turn it is exporting it to India. Then whatever the concessions that were given will not be applicable, and it applies to India also, vice versa. So India also cannot import from a third country and then cannot export to European Union. Then the concessions, whatever the concessions that were given, that will not be applicable. Okay. So the rules of origin are very important, and other focus area was ease of doing business. Those aspects we will try and. Okay. You see, product specific rules have been put in place. The to and to ensure compliance and to ensure their compliance, some provisions have also been kept. You see, these product specific rules, they ensure substantial processing while aligning with existing supply chains. Okay, so the requirements are self certification what it is, it's a statement of origin, okay, which reduces the compliance cost. Means the person who is exporting or the country which is exporting, they have to sign they have to release a self certification saying that the product has origined from so and so country. They have to say that it has origined, it's the origination is our country only, which reduces the compliance burden, okay. Then there are special provisions, okay, with respect to quotas for shrimps and prawns, okay. Then downstream aluminum inputs, then transition periods for machinery and aerospace sectors were also kept in. So these features particularly benefit the MSME sectors, okay, and it reinforces the goal of Make in India. Okay, it reinforces of Make in India. So these are the product specific rules that have been kept in the free trade agreement. So another important area was service trade, which is going to be the future of growth in the which is going to be the future of growth. Okay, right. You see the services. Okay, services are the fastest growing component in India EU trades. It is the fastest growing area. EU commitments. What are the commitments that were given by European Union to? Okay, EU has given market access across 144 services and subsectors, which include IT and ITES, professional services, education and business services. Okay. Whereas India has also given some commitments which covers 102 subsectors. Okay. Some of them are uh, financial services. Okay. Some of the concessions that were given by India are financial services, telecommunications, maritime sector, then environmental services. So both these concessions, the concessions given by European Union to India and vice versa, these create a stable, non-discriminatory regime, boosting high-value services, exports, and knowledge base. You know very well, knowledge-based growth, a knowledge economy is going to be the future, and these commitments given to each other by both the groups, they are going to uh, encourage knowledge based group coming. Then next area we will see, that is mobility of professionals and social security. The mobility of professionals is also at the heart, one of the important aspects for India, because we have surplus labor and we want to send our surplus labor to countries, especially to the European countries where the population is maturing and where there is requirement for labor, provision of labor. But some hurdles were there, visa restrictions were there, countries were not that much welcome to Indians when they are visiting. We have also seen there were severe protests in Ireland, New Zealand. Of course, New Zealand is not part of so in some European countries there were protest marches against Indian migrants. Okay, so this free trade agreement might also address that. Right. So if you see the mobility framework, okay, the free trade agreement establishes a robust mobility framework for business visitors, okay, then intra-corporate transferees, then contractual service suppliers, and independent professionals. Okay, so if you see the coverage overall, 37 subsectors for contractual suppliers, 17 subsectors for independent professionals, they were opened up. If you see the independent openings for 17 subsector openings for independent professionals, they included IT, R&D, higher education. Okay. Additionally, apart from that, this framework for social security agreements, okay, framework for security agreements with all European states within 5 years is going to be realized, and there is going to be a continued facilitation for Indian students in European Union, including post-study visas, okay, including post-study. So these are the guarantees that have been given to India by the European. Next area we will examine is financial services. Okay, a landmark innovation. Okay, so key provisions. The slide is not visible that much, but I'll try to write the important points. You see key provisions in this financial services aspect. If you see the India EU Financial Services Annex, okay, there is an annex in the free trade agreement. It goes beyond, okay, it goes beyond GATS, which is under WTO, okay, General Agreement and Trade and General Agreement on Trade and Services, okay, and this annexure comprises 16 articles, okay, and strengthens cooperation in a sector where bilateral trade is somewhere around 83 billion. Right. The key provisions of this one, if you see, in digital payments and fintech and digital payments, if you see, several things are covered, like interoperability of payment systems is agreed upon, real-time cross-border remittances, okay, was also agreed upon. Then leveraging UPI was also talked about. Then cooperation in subtech, super tech, SUP tech, that is super tech, and CBDC, okay, central bank digital currency, which is coined by Reserve Bank of India. So it was agreed that there will be cooperation on. Then other area that was agreed upon is non-discriminatory credit rating, okay, non-discriminatory credit rating. You see there in that equal treatment for Indian banks and insurers will be given. Okay. Then protection, there will be protection against arbitrary assessment. There will be protection against arbitrary assessments. Okay. If you see if you see in the aspects of FDI and banking services or banking access, okay, 100% FDI in insurance is allowed. Okay, 100% foreign direct investment in insurance is allowed. 74% FDI is allowed in banking. Then up to 15 bank branches, in 4 years. Okay. Earlier the target was only 12 bank branches were allowed in 4 years under the GATS agreement, but in this free trade agreement 15 bank branches can be opened in 4 years, initial 4 years. Okay, so all these aspects, they position India as global fintech hub while enabling the European financial institutions deeper access into India's expanding. So these are the key provisions with respect to financial services annexure that is incorporated in India European Union free trade. Okay. Then if you examine the sector specific gains under the free trade agreement for both the countries, examine, especially with the context of India. So one area we are going to be benefited immensely is textiles and hair. Okay, there is going to be zero duty access across all tariff lines for India. Then access to $263.5 billion European import market in, well, we are going to access that. Then if any tariff disadvantages are there, they are going to be corrected with respect to our close competitors like Bangladesh, Pakistan and Turkey, who have been our traditional competitors with respect to textiles and apparel exports. Then you know very well the sector employs, the textiles and apparel sector employs approximately 45 million people of our. You know very well, after agriculture, the textiles sector is the second largest employer in our country. So all these people are also going to be benefited. Okay. So the cluster impact, this is going to have a huge cluster impact, which comprises of some 342 districts of our country. Uh, the RMG cluster, if you see, which comprises of Tirupur, Bengaluru, Gurugram. Cotton textiles, if you see, Karur, Panipat, Ahmedabad, these districts are comprised. MMF, if you see, Surat, Dadra and Nagar Haveli are covered. Then if you see the handicrafts, Moradabad and Jaipur are there. Carpets area, if you see, Bhadohi and Mirzapur are comprised of. Then jute, if you see, Howrah, North and South 24 Pargana district are. So all these clusters, including some 242 clusters, or clusters which comprise of 342 districts of our country, means it's almost half of our country. Okay, there are some 600 odd districts in the country, so it's going to benefit almost half of the country or more than half of the country. Okay. Then if you see the leather and footwear sector, which is also one of the labor intensive sectors, there is duty reduction in these sectors. So tariffs are reduced from up to 70% to 0%. Okay, tariffs have been reduced to 17 to 0%. Okay. The EU has a huge import market, for these leather and footwear goods. Somewhere around the EU import market for these goods is somewhere around $100 billion. So what is the advantage for India? This is going to boost MSME-led design oriented export. Okay, so indirectly or directly, indirectly, MSME sector that is working in leather and footwear sector is going to be benefited immensely because of this. If you examine the marine products, 100% trade value is covered with respect to agreement on marines. Tariffs up to 26% are eliminated on marine products also. Earlier we were protecting very hugely our marine industry. Okay, you see, it is going to benefit the coastal states, or in fact actually the European Union has reduced the tariffs up to 26% or eliminated up to 26%. So this is going to benefit our coastal states, which do a lot of marine production. States like Andhra Pradesh, Gujarat, Kerala, even states like West Bengal and Odisha, they are also going to be. So what is the advantage here? The advantage is it is going to strengthen blue economy of our. Other area that was there found a place in the FTA is gems and jewelry industry. You see, preferential access was given across 100% trade value with for gems and jewelry also. The EU import market is $79.8 billion, so roughly $8 billion import market is there in European Union. We can take advantage of that. So this is going to be a large employment multiplier in our country. Okay? So more and more number of people can be employed in gems and jewelry industry. They can earn a livelihood. Other area we can examine is chemicals, plastics, rubber. Here 97.5% of chemical exports are allowed at zero duty. The European market, if you see, it is $500 billion. The size of EU import market is $500 in this segment. So we are going to take advantage of that. You see, this is going to enhance MSME clusters and their sustainability. Then the other segment that we can see is engineering, minerals, and furniture. You see, engineering goods In engineering goods, tariffs up to 22% are eliminated by the European Union. Zero duty is imposed on mineral exports to European Union, and there are tariffs reduced up to 10.5% on furniture, bamboo and bamboo products. Okay, so these are some of the changes or concessions that were given to India in this agreement in this agreement by the European. I try to remember these aspects because they might be asked in the exam, especially in the prelims. You might have to remember the figures and the names also, and in the mains exam you can code them. So if you have to see the concluding or bottom line of India UPA is not merely a trade deal, but it is a strategic economic architecture shaping India's long-term growth track. This agreement integrates trade, services, technology, finance, mobility, sustainability, and employment. All these are integrated. Yes. So in this video, I just tried to present you the facts and what are the benefits that India. So maybe in another video, I'll try to have a critical analysis of this agreement. Okay, critical analysis of this. Okay? And you have to remember that couple of years back, China has already concluded a FTA with the European Union. Okay? So, if possible, we might compare the China EU free trade agreement with India EU free trade agreement. Okay? So, this is it for today. See you next time, and then have a very see you next time.